people, what they do, they analyze, and they're great analysts, okay, but something is holding them back. And even though they are great analysts and they show themselves that they can do it, they still lose. And I told them, actually, I talked with a trader not a very long time ago. He was a very good one. He actually managed to have a big payout, but still struggled. And I asked him, why are you struggling? And he said that he has some problems with psychology and he just cannot trust his trades. And I was like, if you have a journal and you just see that data supporting you and you see that you have a very high win rate, I don't know how, I think he had like 60% win rate. And I told him, why are you struggling then? That's a problem with the fact that you probably do not have a very good risk management. So, and also, you just when you're planning trades, make sure you respect them. Every time that happens, in the weekends, I'm usually analyzing the charts. So I'm usually for analyzing the higher time frame chart, okay? I'm also doing an intermarket analysis, and usually I try to stick with that because happen most of the time analyzed on the weekends, and when Monday started I just completely forgot about my analysis. Not doing that anymore, okay? So those high time frame analyses are actually very, very beneficial, and sticking to that is key, okay? So if the trade doesn't go according to my plan, I'm not taking the trade, and that's it. Also, don't move your stop loss close to the entry point. This means that you haven't accepted risk. So what do I mean by that? If you enter the trade and you immediately move your stop loss, that just means that you just don't accept risk. And why are you not accepting risk? Because you risk too much. You risk an amount that you're not comfortable in. People come in trading and immediately start to risk a lot of money, but they are not psychologically prepared to actually uh, lose that amount of money. Okay, and what you have to do is to really, really, really minimize risk. I cannot stress this enough, but I really think that people do not realize the fact that they kind of get psychological freeze, when they just cannot act because they just risk too much and they are not comfortable with that. And I'm not saying it's wrong because you can scale up, but in the beginning, just focus on having a proper edge. So after you have stayed on demo, I don't know, for 3-4 months, after you journaled and you see you have results, then what you have to do is to really just try to fix your psychology, okay? And I'm also going to talk about not staying on demo too much. I see people spend a whole year on demo. I'm not saying that's wrong, but you cannot really develop psychologically by staying too much on demo. That's just too much, okay? You have to develop psychologically because you can be a great analyst on demo, but not be a very good trader in live market environments, okay? And I had this problem. I was very good at demo, but it was very bad when I come to trade live markets, okay? So I'm just suggesting you not to spend that much time on demo because you really need some experience and you need to know how to deal with your emotions, okay?
Adriana, I have a
Also,
question. What would
yeah,
you recommend new traders who specifically struggle with the psychology element of it risk on a per trade basis? I sometimes tell my students 1%, but is there any specific number that you found really just mitigates all of the mental strain and allows you just to focus on building your model out and building your edge?
well, I only risk 1%, so I'm not going more than that. And also, I'm trying to focus no more than 2 trades a day. And if I lose that 1%, then I'm cutting either my leverage or either I cut my risk in half. Then if let's say I lose 1%, then I'm going to 0.5% until I made half of my loss back,
That makes sense.
essentially.
So after a single losing trade, you cut your
Yeah.
risk, or do you do that after a series of losing trades, like 4 trades lost in a week or something?
No, after I lost one trade
Okay,
and I cut my risk immediately. Yeah.
cool.
Yeah. So risk management is everything, And again, I said it, the more you respect risk, the easier profits will come. I actually love this quote from ICT. ICT is a very great teacher, but I didn't really found him to be a very good teacher in psychology. Uh, I kind of like loved the way he teaches because he's I don't know, he kind of like explains things and just makes logic. When I started trading, I traded with moving averages, and it was a total mess because I didn't understand anything. And then I found ICT and it was amazing. But psychologically, I didn't develop at all. Then I looked at Mark Douglas. He helped me a lot with psychology actually. But again, you should work more on psychology, okay? I know you guys like to analyze charts, and I'm not saying that's wrong or anything, but you have to develop psychologically, okay? And you cannot just focus most of your time to really develop your edge. Like, yes, it's okay, you're on demo. First thing you're going demo, you're testing your edge out. See how much win rate you have, see your technical issues, but then focus most of your time on psychology because it's very important. When you're going to scale up, it's very important because if if you are a good analyst but cannot take trades because you're afraid of entering a trade, and everybody was there, like I was there, okay. My biggest problem was that I entered the trade and I immediately exited, but I knew that this trade has some sort of edge in it, but I still couldn't trust it. So risk management is everything because it just, how can I say, if you really accept that risk and you do the math and you see that there's no way you can blow your account, let's say I'm risking 1%, even if I lose 100 trades, nothing bad is going to happen, only that I blew my account. Okay, but what is the likelihood of me losing 100 trades? Zero. Because I tested my edge and I see it is profitable. So that's not going to happen. And I also take a partial system that I'm going to talk about later, okay? If you come into the marketplace thinking about how can you make your losses back, then don't even try to trade. So if you're thinking about yesterday's loss, don't even try to trade because that's revenge trading and you do not want to do that. And I actually have that written in my rules. Do not trade if you're thinking about your losses. Do not even try to trade then. Don't assume or believe anything you think a candle closes. If you have proven to yourself that you are a good analyst, then it might boost your ego, and then you do not wait for confirmation because you know what's going to happen. Okay, so what do I mean by that? I had a period when I was a very good analyst. Like, I was watching the chart a lot, and I intuitively know what's going to happen or with some sort of probability. Okay, and when that happened, I didn't wait for a candle to close because I was so sure that that's going to move into my direction, into my draw of liquidity. Of course, that didn't happen. So this was actually a very hard lesson for me to learn, not to assume anything until a candle closes. Because let's say we have, I don't know, a 1 hour candle, and we kind of like expect some sort of direction. Let's say I'm expecting bullish prices, but I want to see the candle close above the fair value gap. And then I'm not waiting until that candle closes, I'm just entering based on that. And of course, I had some losses because of that, so not anymore. The biggest illusion that we need to overcome is the fact that external factors create stress in us. So I actually want to discuss more about this because people are very affected by losses. Some people even have mental breakdowns. I never had a mental breakdown, but they had. And I was kind of like, why are you stressing by external events? It's just a trade. But they had some problems with probabilistic thinking, and I'm also going to talk about that. When a losses occurs, what do you have to do? You have to really realize your rules. But the problem is, some people do not have any kind of rules. So there's no point in telling people follow your rules. They do not have rules. And I think people actually treat trading like a hobby, not like a business. Because if you were treating trading like a business, then you would done your journaling, you will done your rules, you will know your entry criteria, you will know the market conditions that you like, the like seek and destroy conditions. But people don't know those things because they just like to look at fancy theories, like what ICT posted on his YouTube channel, and they're always looking at that instead of really just trying to fix their trading. Okay, people do not have rules, and that's a big problem because rules are going to save you. Risk management and rules are the ones that are going to help you not blow your account. But people do not realize that. People don't even have rules. If I'm asking somebody, what's your rules, they do not know because they just didn't think about it. They just kind of like have it but kind of like not. So external factors create stress in us. That's not true. When losses occur, like it's your judgment about that loss. There's nothing wrong with losing. Losing is actually a part of the process. Losing is a normal factor that happens in trading. So a loss, like imagine you're going to take 100 days. You're going to forget about the loss that you had today. Like after 1 week, are you going to remember today's loss? No. So you're not kind of troubled by what happened, but you are troubled by the fact that uh, what's your judgment about your loss. Okay, so you had some negative charge emotion about losses. You see losses as a negative thing. Losses are not negative things. You have to see losses as something neutral. Okay, losses are not bad. Okay, losses are just you taking trades and letting the probabilities play out. There's nothing wrong with losses, but people have hard time to understand that, and I get it. Okay, it's very hard to shift your mindset from accepting losses. Some people really do not, and that's a psychological pressure. Okay, so you are going to lose. Realize the fact that this is a normal in trading. The market does not care about your feelings. The things that we consider important today may not hold the same importance or not hold the same level of significance tomorrow, okay? So you're going to forget about today's loss. Some people actually stress themselves a whole day, because they took a loss. That shouldn't happen. You shouldn't be affected by losses. Losses are normal, and I just really cannot stress this enough. Losses are going to happen. You know what's a loss? When you do not respect your rules. That's a big loss. And when that happens, you should punish yourself, okay? When I break my rules, I actually have a 3 hour study session because I cannot let myself do the same mistake twice. And you can only evolve if you really just take into consideration your mistakes. And if you see the same mistake repeating itself for more like 2 times, then the problem is with you, not with your edge, not with your, I don't know. You just have to stick to your rules, okay? And those mistakes that you did, you should really punish yourself. Like, I do not really like backtesting, to be honest. I really like forecasting, and anytime I'm making a mistake, I'm taking like half an hour studying psychology, and the rest of 3 hours I'm usually backtesting. Okay, because I cannot allow myself doing the same mistake. Like you're not going to evolve. So yeah, I know people are kind of like saying that. What's my number one advice? My number one advice is to really not make the same mistake twice. Because if you do, again, your problem is with you. So every time you take a trade, ask yourself, do you want to get emotionally involved in that trade? The trading should be boring, okay? And people find it very interesting. And I get it. Like we have so many theories online, and you can kind of like mark up your charts with all those different colors. And I know it's kind of like interesting, okay? I'm not gonna lie, but psychologically it's important, and people are actually ignoring this part because it is uncomfortable, and you have to pass through that. But people do not really want to analyze themselves. They do not really want this part of trading. They just want the part of trading that's about analyzing. But that's not going to happen, okay? You have to get actually psychologically, actually having a good psychologically in order to really have amazing results, okay? Because there's no point in having those pretty charts if you cannot execute, right? So always ask yourself if you want to get emotionally involved in the trade. And
That's
do
a
not
really
even
really
think
good
of,
point.
yeah,
That's a really good point. The fact of the matter is, like in the individual moment, the amount of TA you do can really, I think, overemphasize your confidence in a specific trade when everything you just told us is exactly about how trading edge only comes from a series of trades, right? The result of any trade shouldn't have such an emotional kind of effect on us, or else we'll never be able to be profitable. And for those who are struggling with that specific, in the moment trade emotions, I suggest using some sort of mechanical system to actually limit the amount of damage you can do to yourself while you build up your mental. Because Adriana here is giving you the techniques and she's giving you kind of the tools to building a strong mental. But in the moment, I also know how difficult it can be to not push the button, to not revenge trade, to not over leverage. So you can go into your actual system. You can go into your rhythmic, you can go into your trade evade if you're trading with prop firms, or you can even call your broker and just tell them after a certain number of losses on the day, amount of trailing drawdown loss on the week, or any session, or capping the number of trades, kick me out of my account. And if you guys have read the book Atomic Habits, which I'm sure Adriana has, if you make something that's a bad habit very inaccessible to you, so you can't actually press the button, you can't put on another trade, you're physically locked out of your broker, with time you'll start building this discipline and this edge, without needing that mechanical system. But I really highly suggest having something like that in place when you're starting, because everything Adriana's saying is true, but in the moment the urge to press the button can be so high that I understand and I teach my students that you need some sort of mechanical system that's just going to kick you out and say, hey, you're done for the day. What do you think about that, Adriana? Do you use anything like that?
there are some brokers that are doing that. Now, I don't know if my broker does that, but I think it's very important. But I'm taking into consideration to really practice my self control. So, if I'm having two consistent losses in a week, then I'm stopping for a week, okay? So, I'm not trying to really push. And I also think a lot of people would be more profitable if they wouldn't trade seek and destroy conditions because, again, people who do not have rules, they do not know what seek and destroy is. So a lot of people want to be really successful in trading, but they kind of like do not take it as a business, as I said, because they do not know what seek and destroy conditions is, and that's very important. Like not only to spot a high probability conditions, but to also spot a low probability condition. Okay, because that's very important. You do not want to burn your account on a very low probability choppy condition. Like you just do not want to do that. Okay, you're just going to burn your account, and for what? Because you couldn't spot out the second destroy conditions. So I actually study a lot of second destroy conditions because it's kind of like annoying when you enter a trade and it's very choppy and I just have to close it because I'm not gonna watch that all. So yeah, I think that's very important. And if you, I don't know, just set rules for yourself. Like after I have two consecutive losses, I'm stop trading for the week, okay? I try not to take more than two trades, okay? But most of the time, I'm just taking one trade a day. So, uh, do you really want? Yeah, I discussed about that. So don't even think about money when trading. Change your trading view settings into percent or ticks because that affects you a lot. If you get emotionally attached to money, that's going to be even harder for you. So, not only that you watch, like you enter a trade and it just goes against your position, then you're just going to freak out, okay? You do not want that to happen. And I seen that in myself. Like, after I changed my settings to show me the percents, like it really changed. Like I just couldn't. Like I didn't care about money, and right now I'm not looking into my balance and whatever. I'm just trading. Like I don't care about the money. Okay, I'm just doing what I'm doing, and I'm looking at the process because a lot of people look at the outcome. A lot of people put pressure on themselves that I have to make I don't know how many or how much amount of money this week. No, it's not working like that. Let's just put a psychological pressure on you. And I also wanted to discuss about the fact that some traders are just buying an account and a platform account, and they just want to pass that in a week. That's not gonna happen. You're just going to push yourself. You're going to trade second destroy conditions, and it's the worst thing that you can do. So I actually highly recommend you to buy multiple platforms accounts, because this way, even if you lose an account, you're not going to feel that emotionally or that psychological pressure on you, because you know that you have multiple accounts to trade from, and you kind of like know that you still have something to trade with. Okay, so that's very important. Also, the more you learn about the markets, the harder it's going to be to execute. This is very important. When I traded ICT, when I started learning about ICT, and I was watching core content, the 2022 model, then I was watching the 2023 mentorship, and there was so many models, and I just wanted to put everything together, like everything, to every single concept. Now that didn't work. Okay, you should focus on really, like, when you first want to find your edge. First of all, yes, you can strategy hope, some people call it, like to really just test out different strategies before you find the one that you feel the most comfortable with, or I know you just like it better. I'm mostly using power of three, okay, and I'm only trading New York, okay, and I just tested a lot of things that ICT had on his YouTube channel, but some people just really try to put everything together, and that's just not going to work. Your job is to really just try to simplify your model as best as you can. Just do not complicate things, because that's going to be very hard for you to execute. You have so many confluences to the point that you do not even know which one should you listen to, because sometimes there are things that are kind of like not respecting each other. Like, let's say, I don't know, Asian range shows us bullish prices, but I don't know what shows us bearish prices. And of course, you're going to be shocked. You do not know how to react to that, and that's just not good. Okay, so try to really, really, really simplify your model. You do not need to know everything. A simple model is all you need. Okay, so now I'm going to talk more about emotions, because now I kind of like discuss about losses, and so you might feel disappointed and angry because you have unrealistic expectations. A 2% return on is actually a realistic expectation, and once you can do that consistently, you can scale up. This will help you if you are over trading or if you are being greedy. Okay, so let's say this week you aim for like 2%. If you did that 2% on Tuesday, then stop trading for that week. Okay, do not try to over trade. And I'm talking to people who are over trading. People who really over trade should aim for like 2% and then just stop. Okay, I don't know why people do not like to hear that, but look, if you really want to overcome this addiction, because overtrading is an addiction, right? You're just focusing too much on trading, and you just want to be in every single candle, every single move. That's not going to happen, okay? Aim for like 2%, and rest of the week taper it, okay? Because overtrading can do more damage than good. People who overtrade usually don't really realize the fact that more trades doesn't equal more money. Okay, actually less trades equals more money, and people do not understand that, and I'm going to also talk about that later. uh, and also, if you're being greedy, like if you want too much, I actually have a solution for greediness. I just take multiple partials, and I try to aim for like a fixed percent, but it really depends on what the market is giving me. But for beginners, a 2% return is actually a good one. Actually, ICT discussed about this, okay? I don't really recall in which mentorship, but I know he said that a 2% return is actually a very good return, okay? So, over trading is also a result of an expectation about this particular trade. Okay, so people come into the marketplace and expect every single trade to work. Okay, they do not have this probabilistic mindset, or they just have problems with their egos, or I don't know. And what you have to do is to not expect. Expect something to happen, but you do not know what. You do not expect this trade to be a winner, and you do not expect this trade to be a loser. You have to be neutral. And that's what I did, and that's how I view life. I see life as neutral. Life is much more easier if you see it as neutral. I'm not seeing my life as being good, I'm not seeing my life as being bad. I'm seeing neutral. There are events that are happening and I move on. That's it. And that's how you should view trading also. You should view it as something boring, as something neutral, okay? You shouldn't categorize losses into being a bad thing, and you shouldn't categorize winning as being a good thing. You should see totally this as indifference, okay? Sometimes ignorance is good in trading because if you're like, I do not care what happens, I'm just executing and that's it, that's a perfect mindset to have. Because you do not want to get emotionally, and I'm going to talk about this a lot, you do not want to get emotionally involved in a trade. And I know it's hard, but you are the only one that can fix that. I might tell you this information and you might not listen to me after I'm closing this presentation, but I'm telling you, not getting emotional is what you want. You do not want to have unrealistic expectation about yourself. Like some people want to be profitable within 4 months. Not going to happen. Give yourself some time, okay? People are rushing. No need to rush. Give yourself 2 years to really develop, to really see how this goes, to really just experience, to really see how you react to losses, to see how you feel when you have those losses, because it's important to really analyze yourself and to really see how you behave and what's your thoughts of, like basically just journaling out things. Now, of course, when you're a scalp, it's pretty hard to journal every single move, but and how you feel during every single move. But if you're day trader, that's a perfect example what you should do when you put your orders and hands off. Like you just journal, okay? So if you have unrealistic expectation about yourself and everything, just realize that you can scale up. But everybody started small. Everybody started with like a 2% a week, or I don't know. Just do not really put yourself to really just consider that you're going to make I don't know how much percent a week. It's enough 2%, even 3% is enough. Like it's really enough. It's scalable, and if you grow your capital, 2% is very good weekly, okay? And monthly that's 8%, and it's a very good return, okay? Also, I'm going to talk about fear and hesitation. So, why does hesitation actually occur? Because you might not have a clear bias, you do not know the draw of liquidity, or you might trade between two PDO rays, and that's a very hard thing to do. I also had problems with this. I tried to trade between two PDO rays, between two fair value gaps, and if you do not have narrative and if you do not have experience and a clear bias, you might hesitate. And that's a good thing that you hesitate when that happens, because that's an indication that you shouldn't take a trade, okay? Again, you risk too much. I'm actually telling people to really write down how much they are risking, to really do the calculations and everything, because you tell people risk management is important, but they do not really take into consideration that how many times I heard on the internet risk management is important, but people do not really take a calculator and really calculate down how much they are going to risk. People do not know when they enter a trade how much they're going to risk, and if a trade doesn't make sense from a risk perspective, then do not take a trade. Like for example, I'm risking 1%, but I have to put my stop loss in a, let's say, relative safe place, or where it's not really likely the price is going to reach into like a order block, or I don't know, break or block, and it's just necessary to have a 1.5 risk, then I'm not going to take a trade, because that doesn't fit my risk management criteria. So I would be better not taking the trade, and I'm just letting the trade pass because it didn't offer me what I wanted, and I'm totally fine with that. Like this week, I don't think I have taken like 2 trades because I just didn't see any kind of good opportunity, and also price was very choppy and didn't really see why was I don't know why would I decide to really risk my capital on a very low probability days. And also, one component to hesitation or fear is the fact that you do not know your model entirely. What's your entry criteria? So, again, you should really test your edge, and you should really back test years back actually to really see your winner and really just building that confidence, okay? To really see that your model works, that you have an edge, that you have, I don't know, you just have to have a journal that really just shows you that you can do that to really build that confidence, because people are afraid of entering a trade. Most of the time is because you do not know your model fully. You do not even know your entry criteria. So, and also, if you operate with the mentality that this could go completely wrong or I might be wrong, then you shouldn't hesitate, because you understand that this is a probability game, and you understand that these trades doesn't matter. What matters is 100 trades outcome, and journals should really tell you that you have an edge in the markets, okay? That you have a and I don't think you guys do not really have a good model, but those psychological problems are the issues, okay? So if like I want to see the results on demo. So when you're testing your edge, you want the results on demo, not only live market environments, because if you make mistakes and if you have a low win rate in live market environments, then that's probably because of psychology, okay? So really take into consideration this. So jumping the gun. When I started learning about psychology, I didn't even know what this term means. I don't know, we don't really use this term in Europe, so it was very confusing. Okay, so basically it means getting in too early. Okay, what I recommend is to put orders and do not move them. So if a trade doesn't, let's say I put an order at the fair value gap, but price just didn't reach to the fair value gap to fill me in, then I'm okay with letting that pass. Like I want to get A plus entries. I'm more focused on my entries, because I can make money even if I'm wrong, because I take partials. I'm going to talk about partials also, because you don't, like, your trades don't have to reach the full TP in order to make money. Like that's a misconception. I see a lot of traders really just not taking partials, and like the trade went in the direction, but like just with a few ticks or pips, uh, they just like return to a loss. And I mean, I'm not seeing the logic behind that. Like why would you really just take partials? Like partials are very important. Partials are non-negotiable, and I'm going to talk about that later. But let's talk about jumping the gun, okay? So I'm okay if price doesn't really reach into my order and just kind of like I'm just missing the trade. Like I'm actually feeling better if I'm not taking that many trades, because I basically know my psychological struggles, and I know that I'm sometimes over trading, and I have to remind myself that I'm okay with letting this trade pass. I'm not going to chase price. If you're chasing price, basically you do not really have where to place your stop loss, and that's a bad thing to do. Don't even think about chasing price, okay? And also, if I do not have a confirmation, I do not take the trade. So I'm not even interested in taking the trade, even if I'm seeing it go into my draw of liquidity, or even if I'm kind of like seeing an SMP or whatever. If it doesn't give me the confirmation that I want to see, I'm not taking the trade. Like it's that simple. I'd rather stay out, even if it goes into my direction. I didn't see my entry criteria. I didn't see a good risk management, or I didn't see my confirmation. I do not take the trade, and that's it. Like I'm not stressing about the fact that I missed this trade or whatever. Like I couldn't care less. Okay, risk management is way much important than missing a, like being in a trade and then just not having a good risk management just because you chase price. Okay, now we're going to talk FOMO. Okay, be okay to let a trade pass without you if a trade doesn't offer you a good risk management. That's exactly what I talked about. Um, I do not care. I couldn't care less, okay? But I know it's hard to accumulate this mindset of I couldn't care less in trading about what happens, because people are just starting out, they want to make money, and they have these problems to really enter a trade, and I get that. I was there. But look, let me tell you something, and that's what I did to really trust myself and to really let my trades. When I started, like, I really had problems with entering and just really letting my trades because I always closed them. Okay, what I did was I risked, like, I don't know, 1% or 0.5% what I felt comfortable with, and then I told myself, look, I do not care if I lose this amount of money. Like, I literally do not care. I'm going to do this experiment for 1 week, and I'm going to let the trade run, and I'm going to let the trade do its own thing. Okay, I don't care if it's a loss, if it's a win, but and that period, that 1 week was hard. Okay, it was hard because I wanted to exit it, but then I told myself, uh, I don't know which trader actually on Twitter said that he thinks about having 2 bullets, and once you use those 2 bullets, no trades for that day. And I was thinking about that when I did that, and it helped me a lot. Okay, so when you actually have this fear of entering a trade, think about, you have 1 or 2 bullets depending on how many trades you want to take. Okay, if you want to take 1 trade a day, then think about, I have only 1 bullet. I might use this 1 bullet to get the best entry, to have a very good risk management, and I'm going to really just let the trade. And I know it's hard. It was very hard for me to really trust my trades. But again, if you really risk 0.5% and you tell yourself, I'm accepting this amount, I'm accepting this amount, I do not care, and let your trades, and really just, you have to basically convince yourself that you're going to trust yourself because you see that this plays out. And I know that part is kind of like not comfortable, but you have to do that for like at least 1 week. After you've done that for like a week, you will see that you're going to trust your trades more. Okay, just try it out. Okay, and leaving money on the table would never happen if you have a partial system in place. Your trades doesn't have to reach your full TP in order to make money. Okay, so I use 3 partials. I put one on the 50%, the 70%, and the final TP. And I had times when price just reached the 50% and then just reversed. Now, not only that I paid for my loss, but I was either on break even or I just made a little bit of profit. And that was just amazing. And just think about that. You don't have, like, your price doesn't have to reach your full TP in order to make money. Like, it really doesn't. And I know people struggle with leaving money on the table. If you're riskless and have a partial system in place, like, you do not care less like what's going to happen. You have those partials, and you're not going to always watch the trades because you know that there are the partials, and basically you're just going to bank some money, and you're not going to really stress about whatever is going to reach for your stop loss, because if it reaches to the 50%, which mostly does, and I'm telling you mostly does, I'm expecting like a 3% return. Like, I'm kind of like a 3R trader, and most of the time it reaches the 50%. Okay, but you can use more partials. I just use 3 because I find it more useful for me, because I backtested my edge, and I have seen many times price reverse of the 70%. So I'm actually using a partial of the 70%. Now you can adjust this. You can do your own partial system to see where price usually reverses, or I don't know how you see your data. Okay. Now we are going to talk about patience. Now patience is like very, 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 very important, and I had also problem with patience, so I understand. Okay, I really understand. But what you have to focus is to really have A plus entries, or at least that's my opinion. I'm not saying that A plus or high probability conditions are not important, but I'm focusing on my entries, because if I have a good entry, then I have a good risk management. Okay, because you cannot put your stop loss at an illogical level or where like price is likely to reach into. Okay, so you kind of like need to focus on sniper entries, otherwise you might chase price. And I'm saying that because I remember when I missed my entry. Okay, and then I knew that is some likelihood of this trade playing out, and I started chasing price. We do not want to chase price, okay? When you see yourself or you're catching yourself chasing price, just stop, okay? Just stop trading, okay? We do not want that. Knowing when not to take a trade is just as important as knowing when to trade. Okay, so we are talking about seek and destroy conditions. Seek and destroy conditions are very important conditions. Some people want to trade every single day, and I know some people trade every single day and are profitable, but as ICT traders, we cannot really do that. Like, only if you're a scalper. But if you're a day trader, that's going to be very hard for you to trade seek and destroy conditions. And I'm not saying why would you burn your capital on low probability days when you could just, I don't know, risk your capital on high probability trades, okay? So really focus on studying seek and destroy conditions, and also try to find other hobbies. When there are seek and destroy conditions, let's say Monday, usually Monday is the seek and destroy conditions, we do not have any kind of news events. So try to find other hobbies and really just not put trading the first priority. And I'm going to discuss why. When trading is your first priority, all you're going to do all day is to think about trading. And when you think about trading, what's going to happen? And you're going to think about this way. I put so many hours in trading, I analyzed so many charts, and I did that, and I did that. And you're going to feel like when taking a trade that this has to play out because I worked so hard to the point that this has to. No, that's a very, very, very bad mindset. So try to find other hobbies, and I actually see that in myself when I started like learning different languages or just really reading and just really find some time to do just something completely else from trading, okay? So really just put trading not to be your first priority, okay? That will help a lot, just trust me. I know it's hard, I know you guys are addicted to charts, okay? But having trading as a second priority is actually a pretty good
Adriana,
advice.
I noticed you're referring to seek and destroy conditions, which I completely agree with. I posted a picture. If you want to go to the Discord and just show kind of maybe some of the people watching what seek and destroy conditions look like, I put it in the free chat. I also put it in this education tab. Yeah, you can just click on the top right. Yeah, right there. So this is what Adriana is referring to when she says seek and destroy conditions, right, guys? So this is a psychology lecture, but this is what she's referring to on the charts. When we see improbable conditions in the London session, we can anticipate a choppy or improbable New York session, and that typically is characterized when London sweeps out the highs and lows of the Asian range. We expect New York to potentially sweep the highs and lows of the London range. This is going to be referred to as a broadening formation, wherein we are extending the range on both sides and we create incredibly volatile, choppy environments within that range. So this is a profile that ICT teaches, and Adriana like hits it right on the nail right there when she says you don't want to be trading these conditions, and you guys as ICT analysts actually can combine your logic of charts and then practice restraint in seeing this and then staying away from it. I just wanted to add that.
Yeah, sure. Yeah, so seeking destroy conditions, try not to trade those. So really just focus on studying seek and destroy conditions more than high probability days, because, and I'm also going to talk about, just because a day has a high probability, that doesn't mean you should trade it if a model is not presenting itself. So let's say we expected this week, Thursday and Friday, more like Friday, to be a high probability day, but kind of like my setup didn't present itself and I didn't take a trade. Just because you're expecting a high probability, or let's say this week we couldn't trade Monday, I believe, Tuesday, Wednesday was FOMC, we had Thursday, I think was the day before large range day. So it was just Friday, kind of like a high probability, but that doesn't mean you should trade it. You only trade when you see your model, okay? I just want to clarify that, because people are kind of like, oh, it's high probability days and I must take a trade. No, you mustn't trade if you do not see your model presenting itself, okay? So after you have developed your edge, spend less time on charts. It will help you become more emotionally detached from trading. Because, again, as I said, hobbies are really helping you because if you have trading as your first priority, you're going to have this emotionally attachment to trading, and you shouldn't have that. So spend just less time on charts. Just really do an experience, okay? Next week. uh, you kind of like spend time, I don't know, analyze things out, put your orders in. If you see a signature condition, then just close your laptop and just do something else, okay? And you're kind of like will see the fact that trading improves when you spend less time, which is kind of like ironic, but your mind just clears, okay? Because you're not spending all that much time looking at the charts and everything. Kind of like see that your analysis really improves, okay? Just try that out. And also you're not going to be so emotionally charged, okay? So many of you would be profitable only by trading less. So we do not care about how many trades you're going to take. You have to focus on the quality of those trades. You do not really want to push yourself and to really just chase price, okay? Spending less time looking at the charts might help you clear your mind and also help you create a carefree state of mind because you do not put yourself through this emotionally pressure that I have spent so many hours looking at the charts to the point that I care too much about what's going to happen. So, yeah, I'm seeing actually people who really spend so much time on the charts, and then they are very angry and frustrated because the trade doesn't play out. Like, you shouldn't really care about whatever the outcome. You should really care about your risk management and your loss, okay? Those two are actually very important. So when you see a signal from your methodology, stop thinking. You have to learn how to turn your brain off. So this is actually very important because you might see your setup, okay? But when you're there, you start to overthink, okay? And you see so many confluences and you kind of like just can't focus. That's a very bad thing to happen. And I also had problems with, like, I experienced every single psychological problem. And although I'm studying psychology, and I thought to myself that I'm not going to have psychological problems, I still did. And you are going to make psychological problems because you are a human, okay? What you have to do is to minimize making those mistakes, those psychological mistakes, and to really have your risk management. Risk management will save you from when you're going to do psychological mistakes, but not only, but risk management is everything, okay? So focus on risk management. And I'm going to stress this because people really do not understand how important risk management is, okay? So when you see your methodology, your edge, your strategy, just act. Do nothing. Let the probabilities play out, okay? You have edge in long term. You do not have edge in short term, okay? Just longer term. So think about 100 trades, okay? Do not think about that. So when you see your method, just enter, okay? Do not overthink it. So basically, your mentality should be, I do not care what happens. It's either a win or a loss. I execute my plan and that's it. Determine the risk and move on, okay? After you close the trade, what you do, you journal. And then you go on with your day. You do not think about trading. You do not stress yourself about what happened because when you do that, you're going to have some, let's say, psychological side effects. Because next time when you're going to trade, you're going to focus on how the outcome of the previous trade actually was. So really try to journal, see your mistakes, and really just cultivate this mindset that I don't care what happens. I only care about the risk, and then I move on. Okay. Do not feel bad for waiting for better market conditions. Patience is important. So, let's say you don't trade for like 1-2 weeks because you do not feel like the market conditions are that good. And actually, since the beginning of this year, I actually felt like the market conditions were the best. Like last year, we had very good market conditions, especially in autumn. But now, I do not really feel like we have. So, I mean, I'm seeing like the markets are pretty out of sync and not just I know I'm expecting better market conditions in April, but until then, just don't feel bad. Don't feel bad for waiting, because patience is important. Okay, what you want to do is to really place yourself in good market conditions. And I know people on social media are posting trades, and you see them really making profits where you're just waiting for a better market condition. Don't feel bad for that. Okay, everybody has different strategies. Everybody has different mindset or different way of how they view price. So don't feel bad for waiting for better market conditions. That's actually a sign that you do a good thing. Okay, so do not push yourself. Okay. So focus on quality. You don't want to burn your capital on low probability days. If you think that price can go either way, that's low probability. Okay. So we take out buy side liquidity and then sell side liquidity, and then we're kind of like raging, and you kind of like see price having, I don't know, some bullish patterns and bearish patterns. Then just do not take a trade. Okay. That's low probability. More trades don't equal more money. And I know it's hard to understand that, but you confuse working on yourself to become a better trader. And that means backtesting, analyzing yourself, studying, with taking more trades, because you associate taking more trades as working. That's not working. Like, a trader's job shouldn't be to always execute. A trader's job should be to develop his character and to really backtest, study, working on psychology. Like, more trades don't equal more money, okay? And please do not spend that much time on demo. Your psychological issues won't be fixed by trading a demo account. You have to trade live market environments. This is not a financial advice, okay? But listen, you are not going to really fix your psychological issues. Like, you are not going to experience psychological issues if you're trading on a demo. Like, I don't think I have spent more than 5 months on demo. Like, I didn't see the necessity. After I developed my edge, I immediately went to the live market environments. And I know some people spend 1 or 2 years on demo. It's not necessary. After you have developed your edge, go and try live market environments. And I'm not saying to risk I don't know how much money, because do not think that if you're a good analyst on demo that you're going to make money on live market environments or trading a live account, because that's not true. Again, psychological issues are going to eat you alive if you do not have experience, okay? So really try not to spend that much time on demo, and before you trade a live account, you have to make sure that you have journal your trades, because it gives you confidence, okay? So, as I said, see multiple strategies, test it out. Look which one suits you the best, or which one do you like. Test it out on demo for like 5, 6 months. Journal it, see the performance, see how much win rate it has, and then go and trade live market environments. That's the right order to do things, okay? Because when you trade live market environments, you are actually going to see your psychological issues, and I want you to pay attention to your psychological issues that you had when you started trading. Okay, I had my own problems. Like, for example, I risked too much. When I started trading, I risked a lot. Like, I didn't have good risk management, and I just loved risking. Like, I didn't have problems losing, but that was the problem, because my losing trades like were way much bigger than my win, and I thought that's a normal thing. Like, I really loved losing. I know it's real, and some people do not really want to take a trade because they are afraid of losing. So everybody has different personalities, and I just want you to really pay attention to that, because that, like, you are going to have that urge to really do the same psychological mistakes. So really pay attention to what you're doing when you start trading. Like, what are the psychological issues that you're going to have, okay? Because those are going to be repetitive, and you just have to overcome them, okay? And I'm going to give you actually a task, and that's what I do every weekend, okay? So you are going to lose. Your job as a trader is to minimize your risk exposure as much as you can, and also to minimize making the same mistake twice, okay? So I progressed a lot in my trading career because I tried not to make the same mistake twice, and this is very, very important. at the end of each month, I'm doing my weekly performance report that I'm actually doing at the end of each week. And at the end of the month, I'm usually seeing what are some technical issues or psychological issues that made, let's say, more than twice. And then I'm really taking into consideration that when I'm taking my next trade, not to repeat the same mistake, okay? So your task is at the end of each week, you will write down your weekly performance report, like what worked out, what didn't, your mental errors, the traits you took from Monday to Friday. That's what I do, and I actually recommend you to do that. You have to journal, because if you do not journal, then you do not know your problems. Like, you need to track your performance, and you have to know like what are the issues and what needs to be fixed. So without writing down your weekly performance report, you simply won't realize the mistakes that you're making. Journaling is non-negotiable. Actually, a lot of traders told me that they want to be successful and whatever, and I'm just ask them like, do you journal? And everybody said no. Like, how do you want to succeed in trading if you do not journal? Like, you have to journal. Like, people maybe do not journal because they do not understand why they should. You should journal because it actually shows you your mistakes. It actually shows you your mental errors, what you have to fix. But if you do not journal, you do not know, because you're just taking a trade. Let's say you have a loss, or let's say you didn't respect your rules, and then just you close it, and the next day you forgot why you did that mistake. And also, every time you make a technical, I'm talking about the technical mistake, you should go on into the charts after 1 hour later, okay? When I don't know, when you don't feel that emotion, you just go into the charts and see why you didn't see that, or why you had a wrong bias on everything. And also, I just wanted to say the fact that I'm punishing myself mostly when I'm not respecting my rules. I'm not punishing myself when I have a loss. No, I'm punishing myself when I didn't respect my rules, okay? So, you should also do an investigation of what happened this week. This is also called a backtesting, but um, for me, backtesting is basically doing a replay mode and really try to kind of like trade what happened. But investigation is, I know what happens, but I just want to know why that happened, okay? And also, you should do a high time frame analysis, like spending more time on the monthly, weekly, and daily charts, looking for an intermarket analysis, seasonality, COT data, open interest, or economic calendar. Okay, so your narrative should start with the economic calendar. Okay, and I'm doing that investigation. I'm looking at COT data, open interest, intermarket analysis. Those are very helpful, and you might know where the weekly candle is likely to expand, or it's likely to be a bullish one or a bearish one. And from that on, then you can just frame your analysis based on that. So we are going to be focused on the process of trading as opposed to the outcome. Don't even look at your P&L. You just don't look at that, okay? You just focus on the process of trading, because you have to develop your edge. You have to develop the process, okay? Not the outcome. The outcome will follow as the process gets better, okay? Do not focus on the outcome, okay? So you have to backtest years back to the point that you intuitively know where is price likely to go. And that's what happened to me. There was a period when I spent, I don't know, like 6 hours in front of the chart, and when I wanted to trade, I intuitively know where price is likely to go, because it just, I don't know, kind of like um, it was something that I intuitively know where price is likely to go. Now, when I say likely, I'm not saying 100%, but there is some likelihood of that really reaching into, I know, my draw of liquidity, and um, also my bias, okay? So what do you do after you had closed your trade journal? Okay, and I want to really discuss this thing, because some people, after they have a winning trade, they journal out, they are very happy because they have a winning trade. But what do you do when you have a losing trade? Some people procrastinate and don't even journal it. And I'm saying that because I'm seeing that in myself. So I'm not saying that I'm perfect, but I had these problems. So if you had a losing trade, go and journal it. Don't procrastinate. That's a normal part, okay? A trader's job is to minimize risk, remember, and this is a probabilities games, okay? So journal your losses too, because some people only journal their wins, and it's kind of like ironic, but you should journal your wins, I mean your losses too. So we as humans like to look for information that support our narrative. So when we hate on someone, for example, we will look for signs that support our judgment. The same things happen when we are in a trade. We look for confidences that support our bullish bias, ignoring the signs that tell us that this particular trade is no longer valid, marrying the trade idea. Okay, so uh, having a neutral mindset is what I'm talking about here. Okay, you're not saying anything as good or bad. You're not saying anything as being like, I know when you enter a trade, you're always looking for like bullish. No, if you see bearish signs, then really just take into consideration that you're not ignoring that because you just want to see bullish prices. You have to take into consideration both scenarios that this could go wrong. Every time that I'm taking a trade, I'm telling myself this could go wrong. Why I'm telling myself that? Because I do not want to get overconfident and I do not want to risk too much, like needlessly. Okay, so you really want to uh, really focus on the fact that this could go completely wrong and to acknowledge the fact that a trade is no longer valid. Okay, this is very, very important. And to marry the trade idea, that's the worst thing you can do, because if you marry the trade idea and you have a loss, you're going to still push your narrative, even though it says otherwise. Okay, so look for signs. Like if you're bullish, look for signs of bearishness. Okay, and if you see that, probably it's low probability. But if you don't see that, that's just a bullish high probability. Okay, so understand, a strategy puts odds in your favor over a series of trades. Okay, you have edge in long term. You do not have edge in short term. So once you understand this, you won't stress out when you are trading. Essentially, if you have proof that your edge strategy works. So journaling is important because it gives you confidence and you kind of like know what you really improve on. Okay, so this is not a right or wrong game, it's an odds game. Okay, and you should be completely neutral. Okay, so first thing that you are going to be thinking about when entering a trade is, how can I risk less? I'm not going to talk about, oh, how much money I'm going to make. People when are entering a trade actually thinking about how much money can they make. No, that's the worst thing you can happen. And I also did that, so I'm telling you, I did every single psychological mistakes, and I know what I'm talking about. And I'm telling you, you want to think about how can you risk less, and do not take anything for granted. Okay, so it's kind of like, I know it's kind of like hard to really trust your analysis when every single outcome of every single trade is kind of like uncertain, but this is a probabilistic game. Okay, you want to be a good trader, then you have to understand this is a probabilistic game. Okay, so a trader focuses on probabilities and how he can lose less. Always think about how can you lose less. And a gambler is impulsive and only thinks about monetary gains. Do not even think about monetary gains, okay? Don't, I told you, don't think about money when trading. You focus on the process, okay? So, fear. Why do you close your trade if it's still in your favor? Some people do this because they do not trust their analysis or setup or do not know where the draw of liquidity is. So, again, this comes with the fact that experience is key in trusting your model. Backtesting will help you with that, journaling will help you with that. Or if you don't know where the draw of liquidity is, now that's a technical issue, not a psychological issue. So you might just work on that. Although the draw of liquidity is pretty easy to find. It's either previous day's week or high, or previous month, or previous day week. Previous day high or low, or blended session high or low. It's kind of like easy to identify, but if you still struggle with that, I think there are a lot of videos about draw of liquidity. So let's go on to the next. Or you might overthink your setup, having a hard time to execute. My best trades were the ones that I didn't spend more time than 10 minutes analyzing. Okay, so once you spend so much time on chart, you immediately know what you're looking for. It doesn't take me more than 10 minutes to really analyze the markets, and usually, I don't know why this happens, but I had very good traits when I analyzed less. And I know this is crazy as it sounds, and I know you guys like to analyze, but I have very, very good winning traits when I stopped analyzing that much, okay? I just seen how